Hi, Glenn. How are you? Bob? TGIF, everyone. Happy partial solar eclipse day to you as well. Hope everyone's doing okay. If you're a ForexAnalytix subscriber, finishing the week strong as Nostrovolgi rang the register on a short crude at 67.15. There's 2%. Blake had a quick trade in Aussie yen up for 1.9. It's closed. Grega is on fire. Got short at 16 on the euro. Euro at new lows. King dollar, and Aussie starting to work for him. Andre's got a harmonic working. So finishing the week strong. I'd like you to consider subscribing so that you have these alerts. I know we talked about it. In fact, even Grega came to face, so for free, you should not have been long the euro, right? I don't think anyone, hi Dennis, I don't think anyone in here, was bearish a dollar. So, if you didn't catch the downside, if you weren't long, consider that a victory. So I want to talk about something. I may not have a lot of time. Getting a reversal, Dow's lower. I'll get to the markets in a second, but I want to talk about pride before the fall. Okay, and a classic modern day example is Elon Musk. Okay, so for months he's been battling with people short selling Tesla. Happened at a few. Why is CF so strong? Rio, I don't know. The dollar's strong. If you want to know what's strong, it's King Dollar. So that's probably the reason. Dollar at new highs, something we talked about. But Elon Musk was battling with everybody. He was, not being balanced at his conference calls on earnings. And the reason is, he talked about Chanos and all the short sellers, is that some people can't handle having critics or not having everyone on their side agreeing with them. So what he did this week was pretty obvious when you're battling with the shorts in your stock and you come out and you announce, you have the Saudis. That's also true, Rio. You have the Saudis in your pocket and you're thinking about going private, was just to jam the shorts. And I'm telling you that the SEC is on this guy now, and there'll be a Robert Mueller assigned to this case. So I'm not saying don't buy Tesla cars, but be careful with the stock, okay? And I want to give you an opposite example. How about the management style and the spirit at ForexAnalytix? So Blake being a little different CEO. So we have our critics and we have people that do not renew. But what do we do about it? Blake and his partners, Steven Stelios, bring on great personnel, upgrade the website, acknowledge each other's strengths all the time. And in Blake's mind, it's about the team more than it's just about him. And therefore, this thing has developed in the last 16 months that I've been here phenomenally. So all of us have a little bit of it inside of us. I do, who likes to be criticized? No one likes critics. In fact, at times we're our own worst critic. Don't do that. But there's a great contrast in styles. I'm not saying, that ForexAnalytix is on a material scale to what, Elon's accomplished with Tesla. But, it's very customer centric here. We work for you. And, if people decide to go somewhere else on their eternal quest for the Holy Grail that doesn't exist, sometimes people need to have different experiences to know what they had. So sign up today. Let's get to the markets now. Potential reversal week. Blake brought up when he was going over the indexes earlier in the week, how the Dow was struggling. And the Dow is now on the verge of a pretty good reversal week, right? So we cleaned out all these stops over these highs, right? And now we're right back there. I wouldn't be long. Okay, the S&Ps haven't quite done it, and the relative strength is still in the NASDAQ, but I'm sure everyone thought it was a layup for new highs this week. So immediate gratification is not going to be there for the bulls, in my opinion. In fact, I think the biggest surprise in thin market conditions would be a bear raid over the next couple weeks into Labor Day. I don't think you could bottom pick the euro yet. On the daily, we're diverging. Okay, so just recapping the week, Blake identified 1620 as resistance, went to 28. Greg is short the euro from 16. And even though we're not confirming on the daily, which is just the first sign, we are confirming on other shorter term 21 reading there on the 1 hour. Yeah, no divergence here. So if you're a subscriber, you have Greg's count and what he's looking for. Also, what is interesting with all this strength, and this could be setting up for next week, with all the strength that we have in the dollar for the first time in a while, last couple days, yesterday included, the gold is holding up and the silver is holding up. Okay, why aren't dollars at new highs? Gold is not at new lows. No, I still think they will, with the continuation of the dollar move, that we will make new lows, I think under 1200. But you know, you look for things that are beginning to give you a market tell or a market message. And normally with what the euro's doing and the Dixie's doing, you know, gold would have done this. Now it's moving sideways. So that tells you downside momentum's waning, even though I do believe there'll be a stop hunt under this low sometime next week. So I think there's some inflation data, and I don't want to take up time if Blake has some things to say so we could trade the number. We have no guests today. Blake, great week. The team did great, and glad to be working with and for you.
Hey, thanks, Dale. Hey, I appreciate all the kind words. I actually, you know, I shorted the Aussie end overnight, right as I was doing the updates for ForexAnalytix subscribers, and then yeah, I did it in the evening, and you know, obviously I banked it this morning. I got up pretty early this morning and banked it not too far from here, so we haven't hit actually new lows. And then, but I got stopped out of my pound. I was long the pound, and you know, tried to play that. So you know, it ended up taking away those losses, but still, it's a little frustrating because I, you know, had such a, you know, I still think the pound's trading heavy, but you know, what's on everybody's mind right now is Turkey. So let's you know, let's just flip over to the lira now. Erdogan is he is talking right now, and basically he, you know, we're not hearing about the release of the Powster. We're not. This is intraday.
He doesn't want anyone to hold dollars anymore.
He doesn't want to. He doesn't want to raise rates. You know, it's really, you know, like. The lira is getting absolutely punished, and see the problem with like the financial crises always start with some sort of liquidity issues, and right now we are going to be facing a liquidity issue because, you know, Turkey can't pay back its loans. Now that its currency is like lost half of its value, how it's going to pay its loans. It can't raise rates. Now you got banks that are going to, you know, you got bank exposure in in Turkey, and that's what's really causing this sell-off in the euro. And I want to show you this chart really quick that was from this German economist, and you'll notice right here, this is the exposure in millions of dollars. So this is billions, actually. It'd be 17 billion in Germany, 38 billion in France. Spain's got 82 billion. So you see why the euro is getting absolutely smashed. United States and UK have 17, 19 billion. They have some exposure, but not huge amounts. And this is where it's freaking the market out, and that's why the euro is coming under pressure. The dollar's strengthening, and I was sitting here trying to figure out what the best way to play this without chasing the dollar at this point, and I'm looking right now. Well, I'm already short the euro pound because I'm like, well, if Europe has a lot of exposure, but the UK has less, I think the euro pound could be a really good short up here, especially we're up against pretty key resistance. We had a nice dark cloud cover set up yesterday, and the UK all the GDP and trade balance numbers, they came in basically pretty mixed, but not too bad. And the pound got, even though the pound got absolutely smashed overnight, the pound is the daily sentiment index is at 7 on the cable, 7, which is just,
have you ever seen that at lower than 7?
I mean, I've not on the cable. I mean, I have. I've seen like a 6 or 7 reading before, but it doesn't last long. You don't get down here without it, snapping back. And don't forget, we have inflation data due today as well. So. I'm not saying that the cable is necessarily a good buy, the pound dollar, but that's why I can play the euro pound to the short side, because I don't mind being long some pound, at least against something else. If it's not the dollar, being long cable against something else, you get a little risk aversion. That's why the pound Aussie is, spiking higher. Look at the pound New Zealand, is stronger. The pound Canadian could be a nice long down here, which I'm not long, but it could be a long, down at these levels, especially with Canadian data. Matter of fact, what I want to do here is really quick, is I want to set up a little alert here just in case, following the Canadian data. But the pound might be a better play to the long side against some of the crosses if you're trying to just stay out of the crosshairs of the dollar today, because the dollar is messy. Now look at the Turkish lira. I don't know what has just happened, but man, we just saw a pretty massive reversal here.
Intervention.
Huh?
Definitely central bank intervention, Blake, because nothing so far.
So?
Yeah, absolutely. Nothing so far that Erdogan has said that is not completely lunatic talk. I mean, I was reading everything that Erdogan said, and you would expect him to say that if, he was very, very short the Turkish lira in his account. I mean, he came out and he was saying things like, they have their dollar, we have our God, and things like that, which is the exact opposite of what the market wants to hear, right? Because it's like going full mental, attacking the market, saying that they won't bend us, nobody's going to profit on the back of our great nation, blah, 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 blah.
They're your next door neighbors, Steve, aren't they?
Yeah, that's why we know them decently.
Yeah,
well. I mean,
okay, so let me ask you this. We've been talking about different countries in Europe over the years having their financial struggles, and Turkey's not part of the euro, but the significance of the size and perhaps a military relationship in NATO, does this concern you with what's happening in Turkey, that it could be
for sure,
something that's contagion from there?
Yes, for sure, because Erdogan, don't forget that Erdogan, in essence, he is more or less a dictator. I mean, the people that voted for him are people in the depths of Asia, people with extremely low education, and people that get fanaticized, etc. There are, he's having to do with
Sounds like
the other area.
America.
No, it's much worse than that. Trust me.
Okay.
I mean, much worse than that. And he's also, you know, in the bad kind of power play. I mean, all his political opponents are getting taken out. You know how this works, and he fully controls the state for decades now. More or less what you've seen in Russia with Putin. The problem is, as you understand, the more the economy gets in trouble, and as it seems Erdogan has absolutely no intention of doing the right things to get it out of trouble, the more he will be looking for things to take attention of, you know, these issues. And obviously, being their neighbors and, you know, having strained relations, you know, since like hundreds and hundreds of years ago. I remind you that Greece was under Turkish occupation for 400 years, right?
During the Ottoman Empire?
Yeah, between the 15th and the 19th, the early 19th century. Okay, so between 1450 roughly to 1821. So you know, relations have always been more or less strained, and you know, it's a good excuse. On the other hand, of course, they have the Syrian things to care about. They also have like an internal Kurdish issue. So to be honest, the good thing is that at least they have more than one fronts open at the same time, which is more or less, you know, somewhat better for us. Now, obviously, I've said that multiple times, and if you remember, I've been covering the Turkish lira for, you know, since we have this show, and you know, I kept telling people, no matter what, don't try to fade the Turkish lira's weakness, because there are serious structural issues with Turkey, and I don't really see why it would reverse and strengthen. And I have to claim the same thing. I think that now this downward spiral has probably reached the point of no return unless very serious measures are being taken. It's now looking by the day harder and harder that they can avoid imposing capital controls, confiscating foreign exchange reserves, going to the IMF, etc. I think that Erdogan had multiple chances to avoid that, but I think that we've now gone past that point, especially seeing the statements he's also giving today after. I mean, just imagine the USD Turkish lira was at 4.5 just at the beginning of July, and we're now above 6, right? I mean, this is
seriously. Yeah. I mean, the strain it's causing on some of these banks has to be quite substantial, Steve. That have the exposure.
The assumption was that Turkish banks will start failing if the Turkish lira goes roughly at 7. Personally, I'm not even sure that's the case, but seeing that today we already hit 6.2 and that just 1 month ago it was at 4.5, now 7 looks awfully close, doesn't it?
Yeah, sure.
Steve, sorry guys, I missed the last 5 minutes. I just want to say, in case you didn't say it, Steve, you were saying when it was at 4 or 4.5, there's no reason to be short dollar Turkey. Well done. That was, you know, a great call.
Yeah, yes, it wasn't a tough call. I mean, it's not that I mean, it's the obvious. Erdogan, the problem here with Turkey is mostly Erdogan, because he does not, I mean, he has become over the years megalomaniac. I remember the times that when Erdogan first was about to come to power, that he was being viewed as a reformist, as a moderate, and he started as one. And then slowly, you know, bit by bit, the power, the glory, and everything else turned him to a megalomaniac, in essence. I mean,
Steve, I flipped the charts over to you, by the way.
Okay. Sorry, I didn't say it. His you know, his ambition is to become like the greatest leader Turkey had of all times, and you know, I don't think he's looking at the everyday picture anymore, and I think he has lost the plot completely. And the biggest risk for Turkey is Erdogan, I'm afraid. And from what I've been seeing, I doubt he's going to have a good ending to his career.
Right.
Just to give you an idea, I was reading a while ago that fuel costs in Turkey are triple what they were since when actually the crude hit an all-time high near $150 because of the currency depreciation. Just imagine that. Just imagine the actual inflation rate that Turkey might have at the moment. I mean, the actual inflation rate at the moment has to be like, I don't know, Stelio, but definitely above 50%, right? Not the official one. I mean, the
For sure, yeah.
Hey guys, I gotta run out for CPI. Just to let you know, Turkey's finance minister is actually on the wires right now. So just a little heads up. Okay. All right, guys. Good luck today.
Bye, mate. Okay, so we have enough said about Turkey. I don't think we can say much more. We have CPI data coming out today, Stelio. We are expecting a 2.3% year-on-year reading, 0.3 month-on-month, or 0.3.
Core CPI, yeah. Core is 2.3 year-on-year, 0.2 month-on-month. And I don't know if we already mentioned, because I missed the first part of the webinar. We had some pretty impressive data today. Japanese GDP beat 0.5% quarter-on-quarter versus 0.3 estimated, and nearly 2% year-on-year now. So Japan is doing well, and actually PPI also beat 3.1% year-on-year. So we're seeing inflation creeping in
all over the world, actually.
All over the world, yes.
Yeah.
Also, the Nordics, we had Norway CPI 3% year-on-year, expected 2.6, and way above 2% target. Sweden beats as well, 2.1% year-on-year versus 2% expected. And we also had UK GDP at 0.4%.
Speaking of the Norwegian currency, Stelio, keep in mind that earlier today the USD NOK hit a major milestone. I was talking about that in case we broke above this triangle. We actually almost made it to 840, but we did make it to this larger formation trend line resistance. You can see it here. We touched it today before reversing. So I think that this general area up to, let's say, 840 is a major area for the bears to hold, because I don't see any technical scenario that's going to work out for the bears if we actually take out that level and we close above it. I mean, it's going to look very, very bad from a technical perspective.
That's why my stop is at 840. So, if it gets hit, it gets hit.
Yeah, so that's a major level for people to watch. As you said, CPI has skyrocketed, and they just don't care about it. In general, inflation targeting is a joke. It has become, a joke. Everybody's talking about. I mean, the common theme among all central banks is and has been pursuing price stability, right, Stelio? Do you think there is even a single central bank that price stability isn't the main target?
Absolutely, but the question is in what? Because it seems to be no longer inflation. It seems that most major central banks, what they want is stability in terms of equity markets. And they don't want to crash.
Let's have a mathematical approach to what price stability means. When something is stable from a mathematical perspective, when it's not fluctuating, when it's not changing, right?
Yeah.
That would imply an inflation rate of 0. Am I wrong about that?
That's the thing. They define price stability as slowly going higher. That's what they define. It's almost like they want the first derivative to be stable.
Exactly. So that's not price stability. So that's the first derivative of prices to be stable. So to have 0 acceleration, right, in the pace with which prices increase.
Yeah.
And still, initially they were claiming that that's the targeting, And then they started giving us, marks. They started by saying, inflation below 2%. Then it became below but close to. Then it became symmetrical. Now we've blown through 2%. There are several major central banks that are running close to 3%, and they're just looking elsewhere. I mean, it's they just avoid even discussing the issue. They mentioned
maybe they think it's maybe they think it's transitory. The Bank of England used to say that, it's transitory because of oil prices or whatever.
I think they don't think it's transitory. I think the problem is they have to choose if they want to do something about inflation or blow the economy a day earlier and blow the economy a day earlier, or just act like nothing is happening, and they choose to do the latter. It's as simple as that.
The problem is that when you start raising rates, you're going to damage the bond market, the equity market, and the housing market, and that's really the source of wealth for the majority of the people that you're in your country. So
yes, since now the business model in quotes of every government is consumption and not producing anything. Yes, that's the case. You're absolutely right about that.
And theoretically, a downturn, a controlled downturn, is very healthy. You can't have anything that goes up in a straight line. You've said it many times. A downturn, 10, 15, 20%, 25%. If you think that house prices or equity prices have gone up 3-4 times in the last 10 years in many countries, major countries, why not lose 25% over a nice downturn, and then you start building on that? I don't understand it. We've said this many times
because it's all about the fake wealth effect, and if they actually go down 15%, the system will implode because the system is not healthy. I mean, what you said is very, very true. Under the assumption that we're talking about a healthy economy, right?
And
if
and
we're
the
talking
system
about
become.
Yeah,
Sorry,
exactly.
go on. I was going to say the system has become very leveraged. There's things like personal loans, student loans, any kind of loan. People are leveraged to the eyeballs nowadays. So that's not the case. That wasn't the case 30, 40 years ago. That's the big difference of today's markets and 30, 40 years ago.
I'd gladly pay you Tuesday for a hamburger today. Huh? Anyone? Will someone please buy me a burger? Hey, and guys, when's the last time you've seen this type of dollar strength? And gold, actually, I know it's up $1.25, $1.50, but that hasn't happened in a while.
Yeah, we were talking about that with Steve and in the chat room, I think, as well. Precious metals and oil are not responding to dollar strength.
Yeah.
So Steve had this really good tip which he closed, and I think it's a good thing that he closed it because
I still have half the position on my account, by the way. So I think that there is still potential for one more leg lower. I'm now protecting the other half. I'm not going to let it run against me. Of course, I'm just going to take less profits, but I do want to ride it through in case we have another leg lower towards 63.5. Anyhow, let me briefly, because we have data coming out within. Yeah.
Oh yeah, and after the data, will you go the bonds, because earlier in the week that you needed more evidence that the bonds could be good. Okay, buddy.
Absolutely. So let me say this: Euro USD has broken below the triangle, currently testing 114.50 horizontal support area. That's also the 50% fib from the lows to the 125.60 highs. Okay, so quite an important level. If we do breach that level, I'm expecting 113 to act as support following that. But definitely, we have to keep looking lower. I said yesterday very specifically, while we were still near the highs of the day, I said yesterday, keep in mind that I'm expecting that Aussie should follow lower Kiwi, and Aussie is breaking actually below the 73 cent area. So I'm looking towards 72 next. I think we're going to make it there. Stelio, let me know the moment we get
coming out now.
We also have Canadian employment coming out.
Core CPI 0.2%
CPI
month
as
to month.
expected.
Yeah.
Yeah,
Roughly as expected. And Canadian numbers were good. Employment changed.
Canadian
much better than
employment
expected.
beat by a lot. Yeah, 54.1K versus 17 expected. So triple the number expected from the markets. That's why we see the USD CAD pulling back. Here it is near the lows of the day. Once again rejected from the 50 DMA. I still think that there is a chance that we will be moving higher from here, but definitely facing some headwinds given the Canadian data that we had. CPI 2.9%, one more central bank that is now toying with the 3% number. Core CPI, that was year on year, core CPI 2.4, so the yearly core CPI is slightly higher than expected, 2.4 versus 2.3 expected. We also had like an amazing, recently, if I remember, Stelios, at some point we saw some 3.5% PPI, if I remember right. Do I remember right?
Yes, we have to also remind ourselves that the Fed, their preferred instrument of inflation is the core PCE, which was funnily enough below CPI, and it's
who would have expected that, Stelios?
He printed 2% last month, but this month he printed 1.9 year on year. So it's at target, more or less.
And you know something, they always have the time to invent another favorite measure of CPI, which coincidentally, of course, is going to be even lower than core CPI. They're going to call it like
the electronics only index. Electronics.
And they're only going to be counting televisions, microwaves, and items of technology that's already in the very mature cycle.
Yeah.
So from that point on, we can all be living by eating televisions and devices such as future phones like old Nokias and things like that.
And the funny thing,
you don't fry those, do you? Or bake. They're healthier if you bake them, Steve.
Yeah, most likely.
In olive oil.
CPI is 2.9% year on year, and it excludes food, clothing, housing. The stuff you don't need to live, really.
Yeah, the stuff you don't actually need, because who needs to eat? Yeah, who needs to rent a place to live? Who needs fuel to put in their cars, right, Stelio?
Anyway, that's a different story.
Yeah. Okay, so now let me go to cable. Cable has been trading, clearly below the confluence of supports at 128.50, and not only that, I had said that the next target of support is at 127.80. And so far today, it's attempting to bridge that area as well. Actually, the next area of support following that is going to be down at 126. I don't have much to say. I mean, cable is, so amazingly weak. You can even see it from the RSI profile. I had said that. Just look at RSI barely managed to recover to 50, then broke below this ascending trend line support once again, and is now at 24. I do believe that at some point we're going to get some kind of a reaction from everything, because I do believe that dollar strength is not the place that the market is actually going to stay in the medium to long term. It is a short-term reaction that we're seeing, based on a big extent on false assumptions having to do with the strength of the US economy and the possible outcome of the trade war. Personally, I don't see these assumptions becoming a reality. But regardless, I always maintain my short to medium term bias based only on charts, and that's why I had said multiple times that this consolidation in the dollar was clearly a triangle, and triangles do break in the direction of the trend, which means higher. I had said that my next target is the 96.50. We're actually getting there, and if we actually manage to break through that, I can also see the possibility of the dollar index making it up to 97.87, which is 61.8% from the early 2017 high to the lows that we had in February. But 96.50 can prove to be like a decently big hurdle. So these are the areas I'm watching for resistance higher. I have to say, though, that the closer we get, especially to the 61.8, the more I will start looking into building some core short dollar positions. So I want to make that very, very clear. The closer we get there, the more I'm going to be searching for opportunities to be short the dollar and not trying to follow what, in my opinion, is likely not the trend. Okay. Regardless, in the short term, we have to respect this breakout. Definitely, though, buying at 96.12, since we're getting close to 96.50, is not advised. Let's as I said before, and this is quite critical, Oz is also breaking lower. I have the 161.8% extension of the triangles, maximum range being at 72, a little bit lower at 71.60. We have another horizontal support area, and lower than that at 71, we have the 161.8% extension of the last bigger move higher. This one, let me mark it, this one. So anywhere between 72 and 71 cents, we might see some good reaction on behalf of the pair. Perhaps that's where we're going to see some rebound higher. Let me also say that I'm expecting, following today's move, if of course we don't see some kind of a reversal, I'm expecting even a bigger shift towards the overcrowded part of sentiment having to do with the dollar. So I'm expecting even more extreme readings having to do with dollar bullishness and the bearishness against like the euro, the Kiwi, the Aussie, especially the pound. So I would caution. I think that the easy part of the move lower in this crosses is probably done. So trying to sell so late in the move. So for example, let's consider the euro. The euro was trading in February at 125, and we're currently below 115. Okay. Triangles are very often like wave fours, if we want to, approach it from an Elliott wave perspective. As I said, I don't think that the euro is going to make it below 113 before we see some kind of a bigger reaction higher, even if that proves to be corrective. Okay. So even if, let's say, it's a rebound towards, let's say, this resistance area at 118.50 before deciding to resume to the downside. So what I'm trying to say is that unless we're talking about short-term moves, selling here and wanting to hold for weeks, seems to me very imprudent. Okay. Now, let me see if we have any. Nick, I just said so. I think we're getting close to that. Of course, I'm not going to be, for example, buying Euro USD blindly just because we reached the level. I would want to see a reaction first. But in my opinion, exactly this level, 114.50, which is a confluence of supports, and then 113. Why 113? Because 113 is the extension of the previous descending channel that the euro had been trading actually for a period of 2.5 years. So 114.50 and lower 113 are nice levels. If I see like a big reaction from any of them, I think that only so many accounts that will need to short cover the short positions will prove to be enough to see some kind of a very decent reaction to the upside. Okay. The same thing will happen with cable. I mean, people are too bearish cable, and I think that might prove to be very dangerous. Just to give you an idea, yesterday the DSI for the pound was 7, right? That's between 0 and 100, as we've said, and anything at single digits or above 90 is considered very, very extreme reading, and it usually works as a contrarian indicator. So today it's 7. If the pound closes even lower today, I'm expecting that this reading might go from 7 to 6 to 5, which is like something
7.
you yeah, which is something that you see so rarely, right? So that is more of an indication that we're getting very close to extremes. I also need to remind you that
Have we ever had a negative number?
That's
Zero could be, huh?
0 to 100.
Negative 1,000.
So I also need to remind you that a few days ago, the reading having to do with the dollar was at 92. It pulled back somewhat to 82, but it was back at 86 yesterday. I expect that, at the end of the day, we might be again at 90. So, as I said, things are overextended, too overextended. So that doesn't mean that this weakness or dollar strength, depends on how you want to see it, can't resume for a few more days. It absolutely can. But as I said, it means that the easy part of the move is probably in the short to medium term already done. So trying to collect a few more pennies before we see some kind of a reaction is a dangerous game to play. That's what I believe. So I've been taking positions that have been mostly being long the dollar lately, although I've traded counter trend. But I have to tell you that the more the days pass, the more I would be looking to make sure that I'm looking to fade this, instead of doing anything else. Of course, as I said, the first thing you want to look for is a big reversal, a big daily reversal, right? And when you see that, that is probably going to be enough to shake the confidence of the market and get a lot of people saying, okay, this was a nice ride. This is probably the place that I should be protecting my positions. And then that's going to cause a bigger move higher, or at least some kind of a consolidation through time, which is going to give you the ability to make money both being in either side of the market. Okay. One environment, of course, the latter that I explained, is more an environment that scalpers like. The other one is more of the environment of people like swing traders, like I am, would enjoy. We'll see what we'll get. But my intuition tells me that we're going to get some decent reaction when that happens at some point. As I said, I believe that's not far away. Let me see what that is, Nick.
What's a Keo?
I have no idea. That's what I want to see. What that is.
Oh, it seems to be a beer. Yeah, we'll take that.
It is a beer. Yeah, absolutely. We'll take that. We'll be there next year with Stelios, as always. Like, when is it, Stelios? May?
It's in May, yeah, the expo.
Yeah, we'll be there in May next year. So we'll gladly meet with you, Nick, or whoever else as well from ForexAnalytix wants to.
Okay, I'll be there.
Perfect. That will be great, actually. Why don't you join us, Coach, for the next? That's going to be great, actually.
It's easy to recognize it. I'm the good-looking one. Steve is the ugly one. Okay.
Yeah, absolutely.
No, he showed the webcam yesterday. His nose is fine.
Okay,
so bonds, man.
Bonds, yeah, absolutely. So, and thank you for reminding me. So, now, what's happening here? I was expecting this reaction lower in the Bund. The last time we looked at it, I said, what's this confluence of supports, the 50% fib and the 200 DMA? We actually made it for half a day below that before reversing higher. So we're now about to test once again this long-term descending trend line resistance. And in all honesty,
on a weekly, it probably looks like a flag.
Yeah, it looks like a big flag. Exactly. Let me show you.
Yeah.
Here it is. There it is. Like a pennant, to be exact.
Yeah.
See?
Yeah.
So, in all honesty, if we do break above this descending trend line, all bets are off, because you should be, let me redraw it correctly. Here it is. Because in all honesty, that points to much higher prices having to do with the bond.
Yeah, that was just
And
choppy, overlapping, nothing. It corrected
exactly.
in time more than price.
Yeah, this is a textbook pennant, right? Just look at it.
Yeah, yeah,
So much time to correct so little
yeah.
of the price action that preceded it. So little, right?
Yeah.
So yeah, to be honest, you know, this, I mean, fundamentally speaking, if you look at it at the moment, you wouldn't be expecting this to move lower, but from a technical perspective, it's so clear, right? It's so clear that for some reason it wants to move higher. And even if we zoom in on the daily, this is a morning star formation, sorry, on the weekly, this is a morning star formation, assuming that we're not going to see in the few remaining hours of the day some huge move lower, which I doubt it. We're going to register a morning star formation on the weekly chart, and we're going to close right on this
On the
huge
highs.
trend line resistance on the highs. Yeah.
Yeah.
So, you know, I would be very, very, very careful, especially, let's say, if we also take out this horizontal resistance area at 164.20, I would be very, very careful because I don't know what's going to cause this move to accelerate. But if I've learned one thing from the markets is never try to fight very strong technical signals, because, you know, sometimes you can't really fundamentally see why a move that looks so clear technically would extend or happen. But trust me, more often than not, it ends up happening. And in essence, confirming what the fundamentals were showing you already.
Okay, so
Now,
they're stronger than the U.S. Treasuries and notes.
absolutely.
Much stronger.
Huge,
Yeah.
huge difference. And you know something? One of the reasons, this is one of the main reasons why we've seen this move lower in the Euro USD, right? It's
The
as simple as that,
differential.
because, yeah, of course, the rate differential. Yeah, absolutely. Absolutely. So, you know, it's not that we're not seeing the effect of this big divergence between the bonds and the treasuries. We are. Where do we see that? In the exchange rate. Now, having to do with the treasuries, the situation is more mixed with the treasuries. I'm going to tell you something. First of all, there is still a decent bearish scenario. What is this scenario? This scenario is that we broke below. You can even see this as a triangle right here, right? Or as a triangle like this. It depends. I mean, there are multiple ways you might want to draw this. So this might be a bearish consolidation that wants to resume lower. And given the prior move lower, we have no reason to believe that that's not the case. But on the other hand, you might want to see this as an A, B, like A, triangle, B, C, one more leg higher missing towards, I like very much this resistance area, which is roughly at 122 and a half. These are the two interpretations here. I'm not sure which of the two is the correct one yet. It can be either of those, okay? So I wouldn't be jumping the gun. I wouldn't be trying to trade the treasuries here because, in my opinion, both probabilities, both are decent probabilities. I would give a little bit of a higher chance to resume lower from here, and this being the whole consolidation. But you know, I don't want to trade something that I feel that might be 55-45 in chances, and you know, it's not that you have an amazing reward to risk ratio to say that, okay, the chances are a little bit lower or a little bit higher if something is happening, but you know, I have a 3-to-1, a 4-to-1 reward to risk ratio, so what the hell, I'm going to do it anyhow. So these are the two possibilities. I think that a move above this high, which is roughly at 120.70, let's say, will open the door for one more push higher towards 122.5. Otherwise, a failure below that level might simply just open a lot more downside straight on. So this is the situation with treasuries. If that's the case, if we expect the treasuries to fail here and resume lower, that might also, at the same time, bring a rejection, one more rejection from that trend line that we saw in the bonds. So what might happen here is we get rejected here having to do with the treasuries. We also get rejected once again from that pennant resistance in the bunds, and bunds, stay within this corrective formation while treasuries push once again toward the lows. I mean,
actually, Steve, the yield chart is a little cleaner than the 10-year note chart. I don't know why. I mean, they should reflect each other exactly, but see that yield chart? Yeah.
So I have a question for you, Dale, here.
Yeah.
What do you like more, the inverted head and shoulders or
The other one? Yeah, or the bigger one underneath.
so which one of the two do you prefer to trade?
Right now the head and shoulders top.
Okay.
And maybe a break back to 265 or something, the breakout. It measures kind of to the breakout. It really measures 240. So I don't know what you have at 240, but that's what
regardless, you have to acknowledge, just by looking at this chart, would you be selling where we currently are? Where would you put your stop loss? I mean, let's assume
above 3%. Over that.
Let's assume you want to sell here. That happens with the assumption that we're going to move lower, but we might find support here.
Right.
So there is barely, if there is, because I doubt there might barely be a one-to-one reward to risk ratio. Make it there. Yeah. Might. We have to measure it exactly. So,
So you're better off waiting for the breakdown, because then it offers.
Exactly. So personally, not a trade I would be taking here.
All right.
Yeah, not a trade I would be taking here.
Fair enough.
Okay, so we had a good look at the bond. My pleasure, my friend. And thank you for bringing it up, because definitely bonds are very, very important to the markets. And as you know, it's an old adage. The bond guys know much better what's happening than the FX guys, and the FX guys know much better what's happening than the stock guys, right?
Yeah.
Okay.
So the bond guys are the smartest ones.
That's what time over time the market has proved. Yeah.
Well, you know who disproves that theory?
Who?
Bill Gross. At least recently.
You're right about that.
Anyway, all right.
Although
he'll drive down from Newport Beach and
although
let's
be fair, he has had a long, successful career in the past, and we have to put everything in context always, right?
Us old guys need to know when it's time to hang it up.
With that, I would agree 100%.
Yeah.
With that, I would agree 100%. Yeah. Sometimes people just don't know when they should just quit.
That's why I love your crude trade. You leave on an uptick at the end of the week. Beautiful. You know what I mean? You can relish it all weekend. All right. Okay, buddy.
Having to do with risk. Do we have an interview, by the way, today? I forgot to ask you earlier. We don't. Okay. So a couple of things I want to note. First of all, DAX currently testing support at 12,400. As I've said before, this might be a consolidation. So I've refrained from trying to take sides here because, I would have probably gotten chopped up. So I think that was a wise decision. But I need to stress out that this ascending trend line support is extremely critical for the trend. And if we do break lower from that, I think that the chances that a bigger move lower will have begun are high. On the other hand, same applies with 13,200. If we break above it, I think that we're going to be pushing to new highs. Anywhere in between is, the index has been definitely very technical. If I was a short-term trader, just by trading, if you have a brief look at my horizontal support and resistance areas, you'll see that just by trading short-term, after you see a breakout from one zone that it's going to make it to the next zone, or if it breaks below a zone, it's going to make it to the prior zone, would have made you decent amount of money. So I have to say that I wouldn't fault somebody that wants to trade it short-term, recognizing which are the support and resistance levels, but that's not my trading style. So anything in between those two levels I mentioned, for me, for my trading style, is just noise. Okay, and I will gladly wait for some resolution before doing anything more. Same thing applies with the FTSE. I had a possible interpretation that this was a bull flag, but as I had said several days ago, I didn't like the fact that despite breaking above it, we didn't see the market actually wanting to accelerate. And then we had the same conversation a few days later with Grega, and very correctly, Grega said that yes, because there is an alternative interpretation, that this might not be a bull flag consolidation, it might be a triangle. And he's very right about it. It might actually be a triangle. And the fact that moving above a potential bull flag didn't bring acceleration is more of a proof that this alternative read on the market might be the more correct one, right? So if that's the case, we would expect more choppiness. But one thing is for sure, I said it a long time ago, Grega is of the same opinion. We have to respect the type of move that we saw entering this consolidation, which was like a very impulsive move higher. So one way or another, I would expect this to be resolved with a break to the upside. Okay, and that hasn't changed. Now, having to do with US stocks, we are seeing, a move lower, but so far it's been really very, very small move in comparison to, the move higher we've seen. In all honesty, in my opinion, anything above 27.90 can just prove to be a consolidation before moving higher. So on a personal basis, I don't see a trade unless we break below 27.90, right? Obviously, the index is overdone in the short term. Obviously, there is potential of moving lower from here. In the short term, we're seeing definitely some market jitters. This is the 4-hour chart. So you can also see that, we actually broke below another wedge, but, that's not enough to turn me, bearish, to make me actually take a trade in that, right? So
when you have the daily up there, Steve, can you put the daily up there again? Because this whole advance that we've had through the whole year, especially in the Dow, but does anything since January, February,
let me switch to the Dow,
look impulsive?
To be honest, no. The price action does not look impulsive. It's lacking the enthusiasm. It's lacking the momentum. Yeah. It's lacking the whole characteristics that we've been seeing until we topped at the end of January. Completely lacking.
Yeah.
So, and that's one of the elements that make me very, very cautious, despite seeing this grind higher that has already propelled some of the indices to new all-time highs. I'm very unconvinced. You know what I mean? I'm very unconvinced, and especially seeing so many clouds gathering up in the sky globally.
Yeah,
I do see the elements that could produce at least one more strong sell-off. And let's add something to that. We've had plenty of sell-offs during August.
Yeah, August
right?
2015. The Dow opened.
Exactly. I remember exactly where I was. I just remember the coincidence. August 2015, I was in Naxos when the big sell-off happened. I remember because I had to, in essence, adjust my vacations around what the market was doing because I wanted to, I didn't want to miss out on those moves. And I'm actually leaving for Naxos in 2 days from today.
Huh.
So
okay, yeah, that's a coinkadink.
Yeah, so who knows?
Steve, it's been great hanging out with you and Face and Stell and What a great week. I had a good time this week. How about you?
Yeah, so let's see. Actually, I'm going to be for the upcoming, during the upcoming week, I'm going to be in Naxos. So let's see if this is the week that's going to bring us some risk off.
Okay.
Speaking of which, before we switch off, I wanted to show the VIX.
Yeah, there was a 3 drive down there too on the 1
Just
hour.
look at this. We do have, we still have some RSI divergence.
Yeah.
We did make it to a support area. I'm also seeing this formation. So let's see.
Yeah, I like it.
I think that if we penetrate through 15,
Where could we go?
We're going to see a bigger spike higher.
Okay.
Okay.
I think that's going to happen. I mean, August is a great time if the bears ever want to have a raid in thin market conditions while everyone's at the Hamptons, and then they just wake up one morning and see a big decline. So
everyone is in the Hamptons or Naxos Islands.
Yeah, right. Yeah, or the Greek Hamptons. Yeah.
Yeah.
All right. Well, have a great weekend, bro.
Thank you. You do. See you
and
later.
Stel, okay, and Stel, have a great weekend.
Thanks, Dale.
And
You too.
And Face, and all our trading warrior brothers and sisters, have a great weekend. Sign up, because I think it's not going to be a quiet August, just a gut feeling, and you could be prepped with our team. Don't forget to watch Blake's video, look at the week ahead on Sunday, and most of all, don't just count your pips, count your blessings. Good hunting the rest of the day. Adios.